Our top story, major banks kicking off the first quarter earnings season this morning. JPMorgan just hitting the wire moments ago, beating expectations on both profits and revenue. Earnings per share coming in at $2.37 per share. The expectation was for $2.28. Shares are moving up on the news. We see about a 1% gain. This is after JPMorgan stock gained more than 2% yesterday. Citigroup and Wells Fargo earnings expected out in the next hour. Joining us now, the Wall Street Journal's global economics editor, John Hilsenrath. What do you make of JPMorgan's earnings, what they've said so far, John?
I think it was a great headline number. We still have to dig into the details, but they beat expectations, and by my initial calculation, earnings per share are up 44% from the same quarter a year ago. That's a huge increase. And, you know, JPMorgan is really the bellwether for Wall Street right now. It is the bank that everybody watches. It's run by the voice of Wall Street, Jamie Dimon. And so I think this sets a really good tone for the markets today after, you know, several days, several weeks of a lot of fear about trade frictions, tensions with Russia. I think the market today looks back at fundamental earnings growth, and what they see is some pretty good numbers in the financial sector.
Here's some of the comments, speaking, John, of Jamie Dimon. Businesses performing well across the board. The global economy continues to do well. We remain optimistic about the positive impact of U.S. tax reform. Michael Block, you've also been looking at these numbers. What do you make of them?
Yeah, overall, the tone sounds good. What I will say is the market's revenue are better than expected, and that was a worry. Granted, fixed income looks better, perhaps equities are a little soft, and investment banking looks a little soft. I'm looking for Jamie Dimon on the conference call to really address how he feels about U.S. trade policy. He did make a comment here about how lending has become more competitive. Is that something that's going to continue, and is that actually longer term a good sign? John, I'd love to know what you're looking for Jamie to really focus on this conference call. What are you looking to hear? What would make you more positive for Jamie to hear from Jamie?
Well, you know, like I just said, he really has become the voice for Wall Street. So we have to listen very carefully to what he says. I'm interested personally in what he says about the interest rate environment. You know, he wrote his investor letter a couple weeks ago. People paid a lot of attention to the fact that, you know, he was talking about the risk of inflation being a little bit stronger than expected and the Fed having to raise interest rates more than expected. But I think what we're going to get out of him today is overall a very positive tone. He's been pushing really hard. He pushed really hard for the tax overhaul last year, and for regulators to take their foot off the brakes on regulation. And he's gotten that. And I think that what you're going to get from him is a positive tone for the economy and the financial sector.
Christina?
Didn't you just were talking about trading, Michael? Don't you think that in February there was a lot of volatility, so we were expecting revenues to increase across the board for a lot of these banks? And you just mentioned now, based off the numbers that you saw, that wasn't necessarily the case?
Equity sales and trading looked light to the consensus.
A little bit lighter than what we were expecting.
Here's what I'll say to that, and this is why, you know, when people get overly excited about deregulation, my little warning sign is this. We make a little joke on the desk when we're dealing with clients, hedge fund clients, mutual funds, pension funds that we deal with at Rhino, and we always say, oh yeah, there's deregulation, there's volatility. Making money is so easy, everyone can do it. And not to disparage anyone, but the point is this. A bank like JPMorgan, we're not in the Wild West days where prop trading runs the show at places like JPMorgan, Citi, and Goldman Sachs, especially.
Prop trading is proprietary trading where they would trade their own book.
They're not just trading like there's some fun. Thank you, Dagan. But they are taking positions to facilitate clients, and there's a little bit of that proprietary trading that Dagan just described. It's not easy to navigate environments like February. If you look at your 401ks, you see there's a lot of ups and downs. It's a giant yo-yo. So this, you know, the deregulation and the volatility can be a good thing if managed properly, but it's not a matter of just mailing it in.
Hey, can I make one point? You know, putting aside whether equity trading was up and fixed income, or equity trading was down and fixed income was up, the revenue number, the top line revenue number in this report looks really strong. I mean, 9%. The revenues are up 9% from a year ago. You know, these banks are not used to that kind of growth, and I think again, it's a very strong undertone for the market and for JPMorgan and bank stocks broadly, with a 9% revenue growth and 44% earnings per share growth. This is a bank that's doing really well.
Is it safe, though, John, because we're expecting earnings growth for the entire quarter to come in? Right now, it's at 18.4% with 7.3% revenue growth. This is before these numbers started coming out. Can we read into the rest of earnings season as these early bank earnings come out? Does it give us an indication of what we might hear from other industries?
Yeah, I mean, I think JPMorgan, like I said, is the bellwether for Wall Street, for the financial sector, and it does set a really good tone. You ask, is it safe? I mean, my worry about the economy and the markets right now would be that we're going on a bit of a sugar high. We had these tax cuts. You know, they're going into people's wallets right now. They're going into bank earnings and the corporate earnings right now. But how is the market and how is the financial sector going to look a year or two down the road after the initial burst of these tax cuts goes through? That's where I would be a little bit concerned.
Mike Block, but at what point does the market start looking that far ahead? Do you think that the stock market overall can react to good news right here, right now, even though we're looking at the last quarter? We're kind of looking in the rearview mirror a little bit. We're
still well off the highs here. If markets are looking for leadership, and JPMorgan seems to be taken well, I can point out the weak parts of it. But JPMorgan, as John pointed out, the numbers do look good. That revenue number does look good here. We're going to see how the rest of the banks play out. I think there is leadership. I think that we do have some runway here. We're still well off the highs, given all the volatility. The problem with that volatility is it's an opportunity to make money, but it also puts people ill at ease. I think what we're going to see is this. We talk a lot about politics in this show, what's going on in November. The Republican Party, and that starts at the top, it starts at the White House, has an interest in seeing the stock market do better. We can say that's not right, and that's not how things should work. But do not be surprised if in the coming months, going into November, we hear more about economic plans. We hear more about fiscal stimulus, which seems to be on a back burner now. We're going to start hearing about that again, and that could get investors and it could get businesses excited about spending more money, raising wages. And I think that could be a catalyst as we go into looking out further as we go through the year.
Yeah, we've heard rhetoric about making the individual tax cuts permanent, the infrastructure spending plan. John, real quick final word from you.
You know, really good JPMorgan numbers. We got to look now at Citi, at Wells, but I think the JPM report sets a positive tone for overall bank earnings and for Wall Street today.
Great.
It's going to be an up day.
Great, John. Thank you so much for taking the time this morning. Great to see you as always, John Hilsenrath.